Rivian is nearing a level in which the charts are suggesting to go long. This is the weekly chart, and we can see that price hit resistance at the $24 level. In recent weeks, we see price has put in some rejection wicks, reacting to this pivot low at the $20 level. The level of interest that I'm looking at is this $15 level. It did serve as resistance for quite a while earlier this year. And typically, when things are resistance, they convert over to support. Now, before we continue with the analysis on the daily chart, let's look at the most recent news. So Rivian stock was in the green. This was yesterday, although shares are still down by about 18% for the past month. Last week, the EV maker confirmed that it planned to build a second EV plant in Georgia during early 2024. The plant will become home to Rivian's R2 platform, which is expected to consist of less expensive and smaller vehicles compared to the company's current models, the R1T and the R1S. In addition, Rivian recently announced that it would unveil the vehicle design of the R2 platform in 2024. Now, this plant is going to cost a decent amount, roughly $5 billion. It's going to create 7,500 jobs. However, Rivian is getting some kickbacks from the state of Georgia in the amount of $1.5 billion through state and local incentive packages. Now, once production begins, the plant will have an output capacity of up to 200,000 vehicles during its initial phase. Upon completion of the second phase, which is forecast for 2030, maximum output expected to double to 400,000 vehicles. Now, Rivian does have a plant in Illinois, and currently it has a max capacity of 150,000 vehicles. Now, headwinds. Shares of Rivian stock have been hammered in recent weeks due to a plethora of negative headlines. Tesla announced their earnings last week. The stock sold off. They announced the deliveries of the Cybertruck would begin on November 30th. You got legacy companies like Ford. They stated it would slow production of its F-150 truck due to supply chain constraints. And then you got Rivian announcing a $1.5 billion convertible green bond offering. That took shareholders by surprise. But it shouldn't be a surprise. Rivian's nowhere near reaching economy of scales. They need to continue to fund their operations and build out. Hence, the second plant that will be online in the future in Georgia. Now, going to the daily chart. Price is now below the infamous 200-day moving average. That's going to serve as a longer-term dynamic resistance line. Typically, when price is below it, you are in a secular bearish market. Prices are above it, you are in a secular bullish market. Now, this is the level that we were looking at on the weekly chart. Now we can see a bit better on the daily chart. You can see this band was support, resistance, 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 and then price shot up back in June. The charts are suggesting if and when price continues to move down, that'll be an opportunity to go long. But you want to see volume kick in, kind of like you saw volume kick in at the breakout back in June. So if you are a believer in Rivian and you are a aggressive investor, yes, the $15 level is an opportunity to go long. If you are conservative, just wait for some type of reversal pattern or confirmation of your liking. Thanks for watching. Subscribe. Please like the video.